Hi, and thanks for tuning into Talk ETFs, ETF.com's weekly video series. My name is Sumit Roy, and I'm Senior Analyst here at ETF.com. Today, I'm speaking with Rahul Sen Sharma, President and Co-CEO of Indxx. So, Rahul, EV stocks have hit a bit of a bump in the road recently. There's talk of lower demand and a price war across the industry. How concerned should investors be about that?
As an index provider, we don't look at the short-term noise. When we're building an index, particularly a thematic index, what we focus on is the big picture. We focus on industries and themes that are going to be long-term and disruptive. So whatever might happen in the short term is not really relevant for us. What really matters for us is that, for example, an area like electric vehicles is going to be revolutionary on a global scale over the next 5, 10, 15, or 20 years. If you look at the data, even in a country like the US, which has not been a leader in electric vehicle production, you have EV sales of way below 1% 10 years ago. The most recent year we have data for now is 2022. It was around 6% of sales. And the preliminary data indicates that for last year, it was going to be around 9% of sales. And that's not even a leader globally. If you look at what's happening in Europe or China, they're well into the double digits and expected to hit 30% in the next few short years.
So the long-term story certainly sounds compelling. And there is one ETF out there that I really want to ask you about, Rahul, and that is the Mast Global Battery Recycling and Production ETF, ticker symbol EV. What differentiates this fund versus the competing EV ETFs that are out there?
Sure. So when we built this index, we wanted to capture the entire opportunity around batteries. Batteries are anywhere from 20 to 50% of the entire vehicle's value today. Depends on the vehicle, depends on the size of the battery, depends on the price, but it is a huge component and a huge piece of the cost of every new vehicle that's sold. What you're seeing is a couple of things in the electric vehicle space. Obviously, they all need batteries. So you're looking at the raw materials in terms of production and the refinements. That goes into the index. We include those types of companies. Then we look at the manufacturing of the battery cells themselves. And finally, we look at a piece that a lot of other firms have never looked at before, which is the recycling of the batteries. If you have 100 million plus batteries over the next few years that are going to reach the end of their useful lives and are going to need to be recycled, that is a massive market. Our data indicates that this is going to be probably around a $25 billion a year market by the year 2025. So huge growth rates in the recycling, because obviously from a logical perspective, it makes a lot more sense to recycle the raw materials than it does to get them out of the ground in the first place, especially when you look at all the demand that's going to be happening. So what we've tried to do with this index is try to capture the entire value chain from start to finish in a kind of circular economy focus.
That's great. So I'm curious, Rahul, what's the advantage of buying a thematic ETF like this one tied to batteries versus a thematic ETF tied to the whole EV industry? Do you get more a targeted exposure to the growth parts of the EV industry when you're just focusing on batteries?
That's correct. When you're looking at just the batteries, you're looking at the core components of every electric vehicle. So it's not really taking a position in, let's say, an individual manufacturer and being subject to the vagaries of that manufacturer's supply chain constraints or that manufacturer's marketing or the quality of their electric vehicle. You're actually getting exposure to the core part of every vehicle, 20 to 50% of the value of it through this index.
And of course, you work on a lot of other indexes, not just this one. So I'm curious, Rahul, what other indexes are you excited about right now?
Well, you're right about that. We're one of the leaders in the thematic indexing space. We're one of the early adopters. Our approach is a little bit different when we build any thematic index. We look at the revenue that companies are generating from a theme. We don't use AI. We don't use NLP. And therefore, people who look at our indexes realize that they're getting companies that have pure exposure to those themes. So when we look at it through that lens, the areas that we're focused on are in a couple of different kind of diverse themes, so to speak. The first is similar to batteries. We're looking at the materials and the metals that are going to be powering the economy for the next 5, 15, 20 years. So we're looking at not only the raw materials that are going to go into batteries, but we're looking at other types of raw materials, like, for example, silicon, that is going to be used to power semiconductor chips that are going to be used for example, everything from artificial intelligence to blockchain technology and mining. So we're very excited about that. We have a future economy metals index that we've licensed to First Trust that we're going to be launching in Europe with them next week. So we're very excited about that product. We're also looking at much more targeted types of exposures. We have a number of top 10 indices that focus on just the top 10 pure play names in particular themes or sectors. We have a US tech top 10 index, similar to Magnificent Seven, a little bit broader. We launched that with an issuer in Korea and another issuer in Israel. And we're launching a very similar product with Direction here in the US shortly in this quarter. That focuses on the top 10 tech names. We're looking at luxury, airlines, and also healthcare, as well as aerospace and defense.
Fantastic. Well, we're going to be keeping a close eye on that. Rahul, it's been an absolute pleasure having you on the show. Thanks so much for your time.
Thanks for having me.